Hello my friends, welcome back to the show. My name is Rocky Outcrop and I am not from India, I'm from Scotland, but I'm going to try and speak a little bit of Hindi just now to honour all of my Indian friends out there who are watching along. So please, forgive me if I offend your ears when I do this just now, if you speak Hindi and I completely destroy the language. But here we go, I'm going to give it a shot and thank you so much for tuning in. We'll be looking at the charts in just a second here. So, main Amit Armari Sabhi Hindi Bolani Valley Doston Ko Ek Vishesh Dhanyavad Kohana Chahata Hun. So that was me saying that I just want to say hello to all of my Hindi speaking friends out there, and now I'm going to just give a little sort of introduction. So namaskar my friends, Bahut Shukira for watching. Mera nama Rocky Outcrop hai. Our main Scotland Europe ke ek chohot se dashti hun. Swagat hai, and let's look at the charts. Okay, so chalo shuru karan. Okay, let's get to it. So thank you so much. I hope that wasn't so bad. Maybe by the time that I've done like all 4 videos, maybe in the Tezos one, it'll flow a little bit better. Anyway, let's look at the charts, and thank you so much for tuning in. What have we had happen yesterday? I think we all know kind of anyway. You can see this big old drop down on the prices, and it's kind of funny in a way as well. If you've watched along with the series since I actually started doing technical analysis, you'll remember back over and around about this sort of a time here in January or so, maybe here, I don't know, some mid-January or February, and I was saying the weather outside was beautiful. It was really sunny and lovely, and I said to everybody, beware of false dawns, because in Scotland the winter actually doesn't really end until the next winter begins, if I'm honest, generally speaking. So, and it was kind of coincidental because it was snowing in New York yesterday, and it was and I was speaking to my mum in the north of Scotland today, and it was snowing up there as well, despite the fact that the weather has actually been quite nice. So it's kind of funny in the way that we've got this sort of fractal with the weather patterns, where over here in the price analysis, the prices were going up quite a bit, and especially here, and the weather was getting so much better then too, and then it started to snow and the prices went down. It's just funny, never count your chickens, I suppose, in terms of the weather. But anyway, that's not why this happened. And if you want to know a wee bit more about why this happened, then I highly recommend watching the video by my good friend TradeSpotting, who and I'll link to that at the end of this one, and maybe put a card in or suggested thing or something. It's in the description as well, and all that sort of stuff, so you'll be able to see that, and it explains exactly what went on. He published it before the actual price action happened as well, so it's interesting to see it and to know as well that these sorts of things can be in some ways anticipated if you take a holistic, broad view of the market. So anyway, what's happened here? You can see that I've got the white 200 simple and the red 50 simple on the charts at the minute. And in the last couple of episodes, I was using different numbers. In fact, I've still got that set to 29. I'll put it back to 21 for now on the yellow EMA, just so that I can just discuss this for just briefly and say what kind of things that we saw happening in and around this price action in terms of the moving averages before diving into the charts as well. First off, if we go down to the 12-hour time frame, you can see that there was this little cross here on the 50 crossing over the 200, and then subsequent to that there was a big drop down in price, and that's not so unusual to happen, when you see these bullish crosses occur. And if we go back up to 24-hour time frame, you can see that there is this upward slope here on the 50 simple, and we knew that would be the case because of the price action over here to the left being 50 bars ago, 50 candles ago. But one of the things that we also spoke about as well recently is how that in the traditional world you've got weekends, and that this concept of the golden cross, of the 200 crossing the 50, the 50 crossing 200, whatever, the golden and death cross comes from the traditional world, where they have weekends. So what we've been doing on the show recently is changing this over to accommodate the weekends. So 70 and 280 actually make up the weekend price, is, you know, like, includes the weekend. And as you can see, if I go back then to the 12-hour time frame, that we're still just coming in here for this cross, and it hasn't quite happened yet. And on the 24-hour time frame, we're a ways away from that happening. So if I just stick it back again, oh gosh, don't know what that was. Hope I didn't say anything. Hope I didn't change any settings there without really knowing what I was doing, but whatever. So if I change this back to 50 and 200 again, and go back to the CME chart, you'll see that that pattern of the crosses and the shape of them is actually the same. And what's significant about this and the price action really at the minute is that we spoke about this area over here. Oh, the drawings are going to, oh, it's not too messy, that's okay. This area here in that 9,000 to 9,200 range, and we were saying that, you know, the way that these moving averages work, because it's an average of the last 50 candles, is and because, you know, the last 50 on the 50 simple period moving average here on the CME charts, that means because they don't trade over weekends, that 50 periods ago isn't 50 days, calendar days from now. It's actually, you know, 10 working weeks ago. So it's a bit longer than on the spot price charts, the 24/7 charts. And if the prices are below this area here of the 9,000s, then for every additional candle that gets added on, that we're not going to see this 50 being dragged towards the upside in, you know, preparing for a golden cross. So the significance of this area in terms of the moving averages is quite clear. We spoke about that quite a few times and said that, you know, by the time we get to the May 17th and things like that, these significant price drop-offs will actually start getting included, and we'll see that upturn in the price action that we can see here on the spot prices. You know, so that's something to be aware of, and well, that's kind of, you know, that's as it stands, the current price here is 8,785. So over there on the CME charts, you'd have the current prices being in there just below this price action here. So we're still, so, you know, so this won't be springing to the upside quite as rapidly as we would have maybe if desired. And if the prices were to drop on down any further, then of course that would put an end to this to the upward price movement, and you might avoid getting the golden cross, you know, which wouldn't be so good. We don't want to see that happening in terms of the longer term picture with Bitcoin. But actually, you know, in general, over the next period of the next 6 months, I do expect for a bull market to begin at some point. Obviously, you know, if it were to just keep going up now, you could say that the bull market began back in the 16th of March, but that's kind of debatable in a way, you know. And you'll be aware as well, having watched along with me, that one of the things I didn't point out in the previous episode is this area here where I've got scribble in on the charts, and that is a gap on the CME charts. And the gaps tend to get filled, and this gap up here at 11,000, you know, they tend to get filled. But when the prices were kicking about there, looking towards the 10,000 area, I did feel a bit like pointing out this gap at the 11,000 area might kind of lean towards the FOMO side of things. And I'm aware that actually probably the majority of people that you were watching on YouTube to integrate my technical analysis with would have been very much on the FOMO-tastic, let's go long, pull down your pants and get swifty side of things, you know. And actually one of my very good friends IRL in real life here told me about what one of the other people on YouTube was saying, that who I probably think is the best alternative to myself out there, as it happens, no, not naming any names or whatever, and they said that the price was, you know, they were kind of aiming towards that 11,000 area and stuff like that. And well, you know, as so often happens, people kind of get caught out of their under at the wrong time. So, you know, in the sense of, you know, determined to be FOMO free and whatnot, I didn't want to mention all that sort of crap. And instead, what we were looking at in the last couple of episodes was a couple of things. Like, one, you had this area here, which is this red horizontal line just here, and the red horizontal line just here, which point out the you know, here and here, which was straddling this price action in a sort of rectangular square shape. And we thought from that you could have a measured move which could go up as far as the 10,500 area. Again, another area that a lot of people in the world of crypto were talking about recently. In fact, one person who was very disparaging towards me, lol, very funny. I think most people read it as being very disparaging who saw it on Twitter, but actually, it wasn't really. But was very much saying that this 10,500 is the next target and stuff like that. I mentioned it on the channel a couple of times, and just kind of thinking, well, we have that overhead resistance, and if we look here on the charts up to the monthly chart and then look towards this downward sloping line here, this white line, you can see this has been on the chart since all the way back here at the all-time highs of December 17, and we are all the way over here in May 2020. So that's a significant period of time for this downward sloping trend line to be on the charts. And where have we come? Well, we've come back down underneath it now. And is that so much of a shock? Is it really when you have it positioned here? Not so much. But if I show you this, if instead what you're determined to do is, like that person on Twitter, for instance, is just use wicks, then you're looking at this and thinking, hey, we've not gone up, we've not even got as close as that yet. If I take this green line away, sorry, well, whatever, that's out of the way, you can see we didn't even touch that, and so some people were kind of looking, in my opinion, at that time at stuff which is not the wrong thing, because I don't think there's any right or wrong. I don't think it's fair to say that in terms of technical analysis, but it was certainly the stuff that can give you a touch of that FOMO and that greed, and really overall that's to be avoided, and this is the kind of the outcome from that. So I suppose I can send out a small congratulations to anybody who actually did decide to take profit in at that 10,000 area, as we were speaking about, as the target or whatever, and then wait and see how things go. And if you're managing your risk as well, kind of appropriately or whatever, in around this area of the 9,500, then you would have been able to sort of get out of that before this big old drop down, and you could have, I suppose, had as well been looking towards the other targets we had in mind if you were kind of paying attention to the price action at the time. Now, it happened very, very quickly, so the likelihood of you being able to respond, without having these things in advance and thought about them in advance was very slim. But anyway, nevertheless, the 9,600, the 8,900, 9,000 area where we have this horizontal blue line, that was broken right through at the time and on the way down. And what did we see as a result of that? So let's just zoom on in back down to the 24-hour time frame and take a look at a couple of little things that we saw as a result. Well, couple of things. We've got this Fibonacci drawn in wick to wick, comes up to here, and this magnolia yellow colored line here is the 236, and you can see that the prices are currently operating below that. So in terms of resuming this bullish trend upwards, we'd want to invalidate this Fibonacci retracement by going up above that yellow line there, and you can see that the prices actually came all the way down and got right up next to the 200 simple moving average here and the 382 Fibonacci retracement before actually turning around again, which is very good points in terms of sort of placing or for anticipating a potential turnaround after a move, which is specifically a heinous move like this, which happened so quickly. You could think, well, snap, give me a couple of points where the market could go to right now in the next 5 minutes. Well, you could say, well, this is one and this is one straight away. And there was a 21 EMA in there as well at 8,500. So for anybody who was watching the videos recently and had decided to be patient in the face of this over exuberant bullish movements towards the upside, which didn't really seem to really justify it happening much further, although there was always room left on the table for it to go further, then well done to you for having sort of been patient enough to sort of wait this one through. One of the things that we were looking at as well was this, as we've talked about quite a lot, was how for us to avoid having bearish divergence, and bearish divergence, which would be quite strong right in the overbought zone, we'd have to see the stochastics go up to effectively all-time highs on the stochastics before dropping down. And we spoke about this quite a bit, and we said, when was the last time the stochastics were up as high as this, as they've been, overall? Just to actually finish making that point, was we'd have to see the prices come up above the previous high here in the stochastics to avoid getting bearish divergence. So there's this counterintuitive idea there, which is that there's two things that could happen. Essentially the prices could come up here and they would be going up to all-time highs, and we've only ever seen huge crashes in the market after it's got there, or it's not going to come up as high as that, in which case we've got the bearish divergence on there quite strongly, and we can imagine that the market would pull back as a result of that. So there's two quite sort of negative warning signs in the face of this movement here. And the third thing, of course, as well, being that we had fundamental, and it's happening in the next 24 hours or so, fundamental changes in the market. And what does fundamental changes do? Whether they're positive or negative, they create uncertainty. So you've got uncertainty in the face of these potential indicators happening for us, and well, what's happened as a result of that is we've had a pullback in the prices, a correction, you could say, all the way down to 8,000 or so. And what do we see in terms of percentage moves from our highs to our lows? Is we've had a solid 20% move. Now, is that necessarily the end of these downward side moves? I couldn't necessarily tell you. And of course, as well, what I'm saying right now may all seem like I was predicting the future, and that's not what we do on this channel. And anybody who you watch on YouTube or read on Twitter or read articles on the internet who does technical analysis with a view to predicting what's going to happen in the future is completely misunderstanding the point of technical analysis. And I talk about this all the time on the channel. There's only one real point in technical analysis, really, and that's for risk management. And if you do, and at least that's for us Rocky Outcropticians, it's part of our mantra. Other mantras out there, since we're on the Hindi theme, is Hare Krishna as well. So Hare Krishna to everybody. Anyway. Yeah, so the what you focus for is risk management zones, areas where you can sort of, and then the sort of what that kind of sounds like to the uninitiated is that you're predicting things, and and as a result of doing that over the last 5 months since starting the channel, we've had very few instances where it looks like we haven't predicted the future, when in actual fact we've never actually predicted the future at all. Never once have we predicted the future. We've only ever accounted for the risk, and if you account for the risk and you leave the predicting the future for the future, if you leave that for the future and you just focus on the now, realize that anything can happen at any time in the market. Every unique moment in the market, every moment in the market, every now, every present moment is a unique moment in the market, and that from that moment anything can happen, which I know seems rather, sort of like how can you cope with that? That's just so massive. But if you're aware that that's basically the fundamental nature of free markets, then you're wasting your time when you do predictions. Instead you have to look to risk management. So what do we have then as a result of all of this? Well, we could go down, I suppose, to smaller time frames, and we could say, like, is there if this is a downward trend, have we got any sort of bullish divergence on the go, and we don't actually have that here, but this is part of a cascading price movement, so it's kind of hard to say that. If we go to the 12-hour, do you have anything like that? And again, it's the same deal, as part of this cascading price movement, you can't really say that. All you really had was the sort of the divergence that we'd spoken about historically on the run up to this, between on the RSIs and the stochastics and the MACD, that was all there, and now we have this outcome from it. So instead we kind of have to kind of look towards pivots and things in the market and say, well, are we going to put in lower lows and the like? And as we can see here on the bring this up bigger and zoom in a bit and just get rid of all the drawings for a second, you can see that yesterday's close actually didn't put in a lower low, which is another thing, another fundamental basic trading aspect is, we said on the way up here, could you really count these other things as being the low? Could you really do that? Because it's been so kind of, we've not really had the lower lows on the way up. Go to the 24-hour time frame. Could you have said this was a low, really? The last lows were all the way back here, and if you had to say one, then you'd say this was a low, but you couldn't say that this area was a low, like this was your local low, that's a local high, and this is a local low, is it? That's a bit rich, really. This is kind of just part of the overall upward movement. So despite the fact the price has got to 10,000, we were saying that we could remain bullish in terms of higher lows or higher highs and higher lows on this 24-hour time frame. Should we actually see closes come in here above, believe it or not, 8,600 or so? So that's what we've seen happen. So far you could say that we're still, in terms of stochastics, having a bit of bearish divergence. In terms of the RSI and the 24-hour time frame between this high and this high, it's not actually divergent, but what we've got is it's coming in, and we've got a low here. If this is a local low, and the RSI has gone down lower, so you could maybe say there's hidden bullish divergence there on the RSI. Again, it's a bit early. It's very early to say that. What you can only say that it's actually, it's binary. It's either you can or you can't, and you can't right now because we've not set in the low. And how would you define that you've set in a low? Well, you'd be going on to set on you'd be going up, just in the way that you couldn't say this is a low. You can say that this is a low, and you could say maybe this was a low, but you couldn't say this was, because we hadn't really done a high or a low afterwards and whatnot. You'd need to have the prices go up and put in some sort of high, whether it's a lower high or a higher high, but it's some distinct price action where you could at least reasonably say that there was some change, or whatever. So that's as close as you can get. But the reality as well is that it could actually go all the way down into the 7,000s, and you could still say that this is all part of the upward movement, and that it could come down to here. And what we saw really in terms of the testing of the price is that you got kind of both of those. You got both of those aspects of things happening there with the price action. Other things to be a note of, to be aware of, is that you can see during this wick here that you've got a massive drop off in the VPVR. That adds up when you look at this candle over here on the left. There's just been, in terms of this, what we've got on the screen right now, there's been almost no trading in this area, as you can see. If I zoom right out again though and include more price action in, despite the fact that there has been some trade in this area, that there shows it drops, pardon me, price action drops off, and you could look down towards the 50 simple area here for where you could maybe find support at again afterwards. What do we have happening in the near future? Can we remain bullish or bearish? It's hard to say. There's a lot of, in terms of talking to people about things, you could very easily have said over the last wee while, be patient, you'll easily get a 20% discount on your Bitcoin. If you're buying it at 10,000, like a guy that I saw on Twitter whose daughter went all in. He got his daughter to go all in on Bitcoin a few days ago. I think over here about the 10,000s. His 12-year-old daughter. All in, and then he's on Twitter today talking about, yes, I'm buying the dips. He bought 10 Bitcoin, this guy, on the way down there. And like on the one hand, here's a guy that's got enough money to be able to buy 10 Bitcoins, without it just being a nothing, and him talking about buying the dip, having bought tons on the way up and all the rest of it anyway. So he's loaded, and his daughter's not going to struggle in life ever at all anyway. But his advice was, like, she can't be buying the dips. She's only a 12-year-old. There's a 20% discount on the table there waiting to be had. Just in terms of the higher lows, just in terms of this trend, if we're going to keep trending towards the upside. Open interest will have changed quite a bit significantly, which will make it a little bit healthier. Things are obviously quite extended. I do feel that there's obviously the potential for things to keep going. This idea of the uncertainty in the market remains in place until such times as it doesn't. There will be a gap on the CME charts towards the upside, providing that the prices don't go up by tonight back to the 10,000 area. So there will be a gap towards the upside. When have we experienced similar things like that before? For instance, over here, it will be a similar looking gap to what, similar enough looking like a quite visible gap on the charts here as well. So that can stay on the charts for any amount of time. They can get filled quite quickly, so you could anticipate perhaps that happening, soon. But I think in terms of, if I have any advice really, it would be to watch that video by TraceBond and consider the fact that we're during this event psychology, and people like to think about the event of the halving. And if you've been watching people talk about things, they'll talk about how this is the date of the halving, as if it's a singular moment in time, and all the rest of it. And really, you can see that this pre-halving pump up in price action. If you look back on all of the fear and greed type stuff, how there was so much greed during this pre-halving pump, so much greed from the time that the prices went down to the 4,000 area, that this has all been a massive greed cycle. and that and what does that do? Well, it pushes up the open interest, makes it so there's tons of liquidity on the table, and other people can come along there and siphon that liquidity away from the small fish accounts into the big fish account pockets, and that's precisely what's happened here so far. When the markets open back up on Monday, could we see more of this to come? We could indeed. There'll be a lot of underwater sort of people in the institutional world as well, so they won't actually even be able to square up in terms of their position until it goes back up to those prices. But in the meantime, does that mean that they're going to actually spend money to push it there? Might not. It might just mean that they spend money to push it down the way and try and find more liquidity zones. But so far, in terms of like the liquidations that would have happened as well, you're looking at things like 25x and 50x and 100x's having been liquidated. The 25x potentially is this being liquidated in the perhaps in this zone here, but you know there's plenty of people that trade with 10x and all sorts of things, and they could still end up being in danger too. So like there's lots of danger out there. I would just advise everybody to be cautious. You know, you don't need to FOMO into any positions now. You don't need to FOMO short it. You don't need to FOMO long it. I'd wait and see how things pan out in terms of oscillators, in terms of these moving averages and whatnot, and all that sort of a thing, and just see how things go in the meantime. We do FOMO free stuff here and on the channel, so make sure you subscribe for daily FOMO free technical analysis, and we like to keep things simple so it can integrate with your other technical analysis too. So just if I'm going to integrate anything into what else you're looking at the minute, I would say then I suppose that you could look towards again the 8,500 area. Will that operate for us as support going forward? Should it get broken towards the downside, we could be looking at more further downside, and we could be looking down to the 7,000s area again without massive changes in terms of the macro picture necessarily. As you can, if you remember the discussion about the question mark about where our actual higher low could come in at, for instance. You've also got the 382 here. It's 8,000 flat. You know, do you want to see that stay? Do you want to see that not get broken? Of course you do. And if I just change this this Fibonacci retracement, it wasn't drawn in wick to wick. I think I said wick to wick earlier. I meant to say body to body. If I put it back in wick to wick again, here, then you can see that the Magnolia line is not that dissimilar, to be honest, but it's right in there at that 200 simple. You know, breaking that 200 simple, it would be reasonable then to think we could go down to 7,700, then where the 382 is, because we never actually achieved that there overall. In terms of where it is right now, though, the prices are above it, so you're looking for that 8,500 area to be maintained, and that's really how we're going to manage our risk. In terms of other things to be pointed out as well, is that we have this line on here. We spoke about that quite a bit, and you'll remember that we also had a line down below, and I got rid of that line. I maybe hid it. Did I hide it? I can't even be bothered looking. It's too late into this episode anyway. The episode's been long enough. Just as a sort of general quickly shove it in here, you can see that we came right down to the bottom of this zone, you know, so another sort of area to be paying attention to. Of course, another reason why that 8,000 area is so important is because, of course, that's where that bottom of that channel is. Breaking down below that, haven't had a fake out from it, so to speak, you know, or at least, you know, not the full measured move anyway. And you can measure these in a variety of ways, but you know, you could come up here, come down, and then perhaps, you know, if you broke down below it, then you could be looking down in those 6,000 areas again without too much, you know, without in terms of the structure of all this, without anybody saying anything, you know, completely abhorrent has happened, which doesn't make any sense. There's definitely a narrative that can be applied to this retrospectively, which makes a lot of sense. So that's what I'd be worried about, or you know, my concerns lie in that area. Overall, will we see this turn around and turn into some sort of hidden bullish divergence overall, or will we not? You know, that's the question for us. Of course, RSI is not divergent on the 24-hour time frame between these two highs, but it did go all the way up to this top zone and get rejected from it. Now we're back down below previous lows on here, you know, and is this going to be the beginnings of a downward trend or not? We have to wait and see how this pans out overall, but we can imagine we can manage our risk around certain areas anyway. So yes, thank you so much for tuning in, and I hope you enjoyed the Hindi attempt by me, and I hope that you've been able to take something away from this episode. It's been 30 minutes. I feel like there's something in there, but I'm not 100% sure, but I do know that this should integrate pretty well with whatever else you're looking at. I'm going to have a wee drink of tea in honor to India yet again, and tune out. So thank you very much for joining me. Be sure to subscribe, subscribe, and all that stuff, and for Malenki. I'll catch you later.